Hello and welcome to this interview. I'm Andrew Sachs from ETX Capital, and I'm joined by Howard Friend, CMT, who is a 30-year veteran in the FX trading industry. Hello, Howard.
Hi Andrew, how are you?
Very good. Nice to see you.
You too.
Very good. So, just Howard, I gather you are, we've known each other for some time, and actually would like to go into some detail about your trading and your experiences as this particular conversation goes on. But a bit of background, you're based in Switzerland and you've been there for some time and have good experience working for some very high-end Forex trading companies, as well as being working for yourself as a professional trader, and actually also developing trading strategies and systems, which is something we will certainly go into. So I gather that over the 30 years, there's been a huge amount of change in not only in the markets, but in the type of technologies that are used in the industry. You've certainly seen some ups and downs and some eureka moments and some hairy moments, so what's it been like over that period of time? Where was the highs and lows? What did you decide to think, oh, that was great, I'll stick to that, and oh, that was a bit close, better be a bit careful next time?
Yeah. Well, my own. Everyone seems to have a bit of a journey in terms of getting to become a professional trader. My own journey kind of started off. I was working for a Japanese equity warrant trader back in the late 80s, and they were basically trading Japanese warrants, which are kind of basically long-dated call options on Japanese companies. The last 2 years of the Japanese bull market in the late 1980s, they were making money kind of hand over fist just about every single day.
Yes. Yeah.
When the bubble burst, after the bubble burst, things kind of changed. And for a young whippersnapper at the time in the industry, it was quite interesting to see they were doing the same thing on a daily basis, but wasn't actually working out for them. So I decided at that point to really embark on a career in chart-based technical analysis, basically to develop alpha seeking strategies.
Yes, yeah. Alpha seeking strategies is quite an interesting thing because it's not very widely understood by a lot of people. And over the last few years, you do see a lot of references to it on things like social media. And some of them are people who are using a buzzword. And so there are very few genuine people who can show strategies like that, who have got a good background like yours, and actually a CMT qualification, CMT being a chartered market technician, which is a genuine recognized trading certificate for market technicians who are authorized. Rather like any other trade, this is a trade body. So there are very few that are actually qualified and have these credentials to come up with adherence to such strategies.
That's correct. Yeah, it took me 3, 4 years to actually complete the course. It's a kind of a home study type thing. So I
Right.
think if you're doing it, you've got to be very committed to the subject. So I did that obviously whilst doing a day job and kind of learning my trade by analysing the markets and just learning how to develop winning trading strategies. So my own journey kind of went through the 1990s working for third-party research providers, offering trading recommendations to the professional trading community. I got into algorithmic trading at the back end of the 90s because I found that a lot of the discretionary methods, which I still use today, and we'll probably talk a bit about Elliott Wave, I
Yes.
found that good as they are, you never really knew when you take a discretionary type trade, if you hit a drawdown, you're going to hit a drawdown at some point on several occasions. How low does that go? So becoming systematic gave you the ability to see how bad could things really get if I'm running a really good strategy, because things will get bad along the way temporarily. So I committed myself to learning how to program my own ideas. So develop the ideas, program them, and then eventually I joined a family office in London where I kind of managed a managed futures account for them, just basically running my own algos for them.
Yeah, I see. And actually, that subsequent to that, you actually joined a Swiss bank and made quite a lot of difference to the way that operates and the way its trading strategies work.
Yeah, so I joined essentially a Swiss bank stroke broker.
Yes.
The clients obviously they clients can be a little bit funny when it comes to dealing with brokers, and there can sometimes be trust issues. So from my perspective, what I did was I unfurled my trading strategies, my algos for the broker. So basically, I was showing the clients that I was kind of on their side, showing them that yes, you can make money trading, and the institution I'm working with can totally be trusted. So it built quite a lot of trust with the client base. And they saw that the strategies were good. Many of them copied the trades because they were producing quite a lot of alpha.
Yes.
So it's quite a good exercise, yeah.
That is a good exercise, absolutely. And talking of alpha and sort of strategies which are very interesting and perhaps very much almost a gung ho, but make perfect sense in a way, is one of your methodologies, which is very interesting, is that you actually advocate and in a way teach people to master this particular way of doing things, buying high and selling higher, which is interesting because you're getting a popular stock or commodity or popular asset class that is gaining momentum, and get in whilst it's going high with the speculation that it might go higher.
Yeah, exactly. I mean, the way I see markets, it's a bit like an auction type process where everybody's chasing something up or chasing something down. So if you can recognize, if you can find a model which can recognize when something is about to pop higher or lower, then you can jump on board just as everybody is starting to make that trade. So you've got a kind of momentum push going. So the algos that I've developed pretty much they aim to identify this kind of setup, and they get out as the market pops higher, taking profits along the way. So it's a kind of join the bulls as the market starts to rise, buy high, hopefully sell higher, sell short low, and hopefully cover short lower. That's
Yes,
the
I see.
principle.
Very interesting indeed. And over the period of time of trading these types of strategies, have you come? Surely there must have been time. There's certainly always times. We're going through a revolutionary period at the moment where community-driven meme stocks are catching everyone's attention, and it's even we're even seeing some of them starting to list on the Russell index, which is incredible. I mean, these are stock market. These are main markets in New York, London, Chicago, who are admitting these blank check companies. Some of them have never made a product and they've bypassed all the due diligence procedures for the stock market. Now they're listed on prestigious indexes, and people are traders and social media users are going on the internet and making their own markets, which is incredible. So, these have happened before. We've seen flash crashes in the past. We've seen short selling with the subprime mortgage market in the late 2000s. Those are just two examples we've seen in the 19 when you and I started in this industry. I started in 1991, roughly the same time as you. There was in many parts of the Western world, there were 15% interest rates on borrowing, and lots of companies going bankrupt because they couldn't pay their business loans and so forth. We've seen that before. There must be times when you've had these strategies that, oh, that was a bit of a hairy, that was close, and then learned from it and developed something to combat those things in the future.
Yeah, absolutely. As I say, it is a bit of a learning curve, the whole trading experience. A couple of things that kind of stood out for me. One was, I guess, my first real trading mistake when I first started. 1996, Bill Clinton got re-elected, and there was a bearish head and shoulders top pattern on the S&P 500. So I decided to sell into that pattern, looking for the market to break down, as the textbooks tell you to do. The mistake that I made at the time was kind of having a stop and then kind of moving the stop. And really not really knowing exactly what I was doing. I was increasing the risk rather than reducing the risk. So that's kind of one lesson that I think a new trader should take on board, is that when you make a trade, you need to be very disciplined about your risk control,
Yeah,
because one bad trade can kind of blow the account, and it's really not a
that's
good
for
way to
sure.
go.
Especially on OTC accounts where there's no central counterparty, leverage trading, it really requires a lot of discipline.
Absolutely, yeah, and I think that's why many traders kind of they struggle, new traders, because they don't have that strict risk control. And I think being systematic, that tells you exactly where you should put your stop, how many lots or contracts you should trade, how much you should risk on any given trading idea. So yeah, discipline is very important.
Absolutely agree with you. Yeah, it certainly is. And actually, there are lots of tools which as well as your very interesting and well developed strategies, there are a lot of tools that can exactly can bolster this systematic approach, such as your reference to Elliott Wave, which I believe you have a lot of you're an advocate of, and you've got a lot of ways of actually showing how to interpret Elliott Wave cycles and patterns.
Yeah, that's right. One thing, I use Elliott Wave for much longer term analysis, as opposed to trading on a daily or multi-day basis. Elliott Wave is much better, in my opinion, for those longer term, multi-week, even multi-month price moves. Yeah, and Elliott Wave is it's a discretionary trading method approach, and not everybody can use it correctly. It's very difficult to actually to handle in real time. So again, you need a lot of discipline when you are dealing with something as subjective as Elliott Wave.
Yes, I agree with that, and certainly feel free to demonstrate.
Sure, let me just flip across to my example here. So basically, Elliott Wave, it's about market structure. It's a series of waves to the upside and to the downside. You get moves in the direction of the trend, known as impulsive waves, and you get moves against the trend, which are known as corrective waves. So the idea, if you're trading based on Elliott Wave, is to identify whether the sequence is a 5-wave move or a 3-wave move, or some combination of corrective type move. So from a trading perspective, what you want to do is you want to identify the end of a corrective move and look to make a trade in the direction of the main trend. So essentially what we're talking about is you have this kind of cycle. You have 5 waves up in the direction of the trend. So in this case, we're talking about a bullish sequence. So the trend is up. So you have 1, 2, 3, 4, 5 in the direction of the trend. And then when you get a correction, you get this ABC. It's the lettered sequence against the trend. So the idea would be to try to identify from a trading perspective when an ABC correction from a swing high, for example, has finished. And if you can do that, then you are getting into the next leg of the uptrend, which is obviously the objective of the trader.
I see.
There are various patterns that Elliotticians look to identify. So, for example, this is a funny one called a zigzag, which is basically just a 3-wave ABC move against the trend. So if you can identify an ABC down, as I say, you take a long position. You're looking to take a long position, looking for the market to break up to new highs. Interestingly enough, we've got some pretty good examples here on euro dollar. We had in the run-up to the election last year, we had euro dollar topping out around the kind of magical 120 level. We had a kind of A move to the downside, a 3-wave move, followed by a 3-wave move to the upside of B, and then a little 5-wave move to the downside, which finished on the day of the election, basically. So we had kind of A, B, and C. Within an uptrend, we had a swing high, and that gave me the kind of impetus to call a major low for euro dollar and the next leg higher within the uptrend. So it can be quite good from a forecasting capacity. Interestingly enough, we're in a very similar situation right now to where we were going into the election result. Euro dollar topped out in this case around 123.5. We've had an A, B, C down. That's kind of wave A. Then we've had what I think is a wave B. And by the way, this is quite subjective and open to interpretation. But for me, we've had A down, B up. So all we need now is to complete this move is a 5-wave move to the downside for C. So we have, in my opinion, 1, 2, 3, 4. And now we're breaking down in what I think is the final leg of this correction, which will pave the way for euro dollar to make new all-time, well, not all-time highs, but new swing highs. Maybe 127 is my ballpark on that.
That certainly seems to play out according to correct. The pound against the dollar has been very strong for around 3 months now, and there's not much sign of that changing even at the moment. Considering the US being very industrious by comparison to the continuously locked down businesses in the UK and the spiraling debt, pound is higher. Same seems to be the case with euro dollar to some extent.
Yeah, it just seems to be, I guess, two sides I guess two sides of the same coin almost. You've got cable and euro dollar doing a similar kind of thing, for the most part, apart from the occasional sterling related, Brexit or something like that, some kind
Yes.
of
Yeah.
sterling related news. They tend to do similar kind of movements.
Yeah,
So
absolutely.
it's not uncommon to see the same pattern in cable vis-a-vis euro dollar.
Yes. Yeah.
And interestingly enough, what I've got on a long-term perspective, if I can find it there, the dollar. This is the chart of the dollar index going way back to the 1980s. I'm sure you remember those times.
Oh, yes. The days of the pinstripe shirts and filofaxes.
Absolutely, and the yuppies, of course.
That's right.
The dollar basically topped out in 1985 when they did the Plaza Accord, and has since been in a downtrend, a major downtrend since then. It doesn't feel like it's been in a major downtrend, to be honest, because we've had these big counter trend moves in the direction of the dollar going higher. So what we've had, in my opinion, is we've had since 2011 or so, we've had the second half of a bear market rally, which topped out in early 2020 amid the initial COVID breakout.
Yes.
So we've had kind of A, B, and 1, 2, 3, 4, 5 for wave C. So as I mentioned, it's essentially using Elliott Wave. What you're trying to do is you're trying to identify the end of an ABC sequence. And if you can do that, then that gives you a very good low risk opportunity to take a stab in the direction of the major trend, which in this case is down.
Yes. Yeah, absolutely. That makes sense. And these are things which, through your company HF Systems, are widely available on this almost macro analysis basis, and therefore I think very valuable to a lot of traders.
Yeah, exactly. I do quite a lot of different things, ranging from the very short-term systematic stuff as we discussed, out to this long-term kind of macro technical analysis. So there's quite a lot under within the stable. As you mentioned, I also like to do lots of education. I like to help traders. I know trading's a very difficult thing to do, whether it be for a living or for I guess a good second income. It's a tough game. It's a very tough game, and you need to be very disciplined. You need to have a handle on your methodology, on your discipline, and on your psychology as well, because trading is a very psychological game.
That's for sure. That's for sure. I agree with that completely. That's certainly right. Well, very interesting indeed. And thank you very much for joining us, Howard. Howard will certainly, for those who are watching, Howard will certainly be joining us again for various other aspects of trading over a long period of time. We will certainly be speaking to Howard regularly. So certainly stay tuned to that. It's valuable information. Thank you, Howard. Very nice to see you.
You too. Absolute pleasure. Thank you very much, Andrew.
All the very best. Bye.
Take care.